Firstly, on yield curve control, I think in the current environment, it's a complete nonsense, and that's part also. But I do believe that that's part of the reason why the curves are so flat. There's this sort of like entrenched view, and that yield curve control will come at some point. I think yield curve control would come when we are in like such a entrenched deflationary environment that you would have to basically peg the long end to get like real yields down. That's not at all the markets we're in right now. So I really do not believe that yield curve control come in at any point in that expansion. I think the long end will price conditions, macro conditions, where they are eventually, rather than where they should be. Again, coming back to your introduction, I think if we get to like levels of real yields in the 1 year that are say like 1% with real growth, which is potentially like double potential, let's say at like 3%, then you've got absolutely no issue actually financing your debt, and in fact your debt ratio will massively improve. So it's all about where yields are compared to where real growth is, and really the game is not to have like zero yield or negative real yields. The game really is to have like real yields lower than real growth, and that will actually get your debt ratio to come back down on its own. So it's almost like a case of like printing as much as you can so that you get to escape velocity, and then your economy is starting flying on its own. You don't have to worry about where the curve is.